All right, good evening, everyone. Welcome back. Thanks for joining us again tonight. Roy and I look forward to meeting with you guys and sharing our update on what we're seeing in the market. And today we're going to talk about choppy trading and the leading groups and things that we're seeing, uh, in some of these leading stocks that have been faltering. And we'll go through that in detail about, what's happening. Things in the FFTY, we kind of use that as a little bit of a barometer for our style, and we're seeing that we're just seeing extreme volatility the last 30 or 40 days, let's say, and it's been difficult. So with that, we'll just move on and we'll get this meeting started, and we can get into the meat of things, where I'll give you a little bit of an update, and then Roy and I will go over some stocks that we're looking at, although it's a little bit of a short list. But again, if this is your first time, hey, this is the Maddox Market Musings update. We are a group of investors. We were primarily based in Charlotte, but with the internet, of course, and sort of through COVID, we expanded all across the country and really world to connect with different people. And we focus on technical and fundamental analysis, and a lot of that's grounded in this How to Make Money in Stocks book by William O'Neill. So we'll use a lot of those resources that he created over the course of his life. And again, this presentation, it's for really entertainment, informational. They're not recommendations at all. We might share some things that we're doing for our, in our personal accounts. But as always, just consult a financial advisor for any recommendations for what to do. This CAN-SLIM acronym, this is something that's focused or that's featured in the book How to Make Money in Stocks, and it's an acronym that sums up a lot of the key things that a lot of the key criteria for leading stocks in the past that have had monster runs. And so that's what we're trying to identify. That's why this group exists, and we share our thoughts on what we're looking for, so that we can help each other find the next leading stocks. And William O'Neill summed it up with these 7 things: earnings growth, a company that's changing the way we work, live, and play. That's that new N acronym right there. Supply and demand. So we're looking for volume cues. We are looking to see where institutions are buying, because that's where the real price pressure occurs, when institutions are piling into a stock that they see big potential upside for over the coming years. Leader or laggard. So we're just focused on the leaders here, right? We're not looking for value players. We're not looking to scoop up PayPal because it's gone nowhere or it's down 70% from the highs, things like that. We're looking for the stocks that are making new highs in price. So that's that leader. Institutional sponsorship. We kind of look at the funds that are purchasing the top performing mutual funds, the top performing pension funds, things like that. We want to see the institutions participate, because again, that's really for those durable, true market leader stocks that make multi-year moves. And can change your life. So institutional sponsorship is certainly important to look for. And market direction, we know that we can't really fight the trend of the overall market. If the market's in gear, if the market's in an uptrend, we're going to have a lot better batting average. We're going to have a lot better success on the long side when we're trading with the market. And when the market trend changes, we're going to have a lot more difficulty, and we're going to realize we need to maybe sit out or at least trade smaller if the market is in a downtrend. So these 7 things, again, study them. It's a really good high level checklist for what to look for. Roy and I, we talk about this, our 3-pillar approach, things that matter: technical analysis, fundamental analysis, and macro. We'll go into a little bit more about each of those real quick. And I'm sure a lot of you are familiar, but technical analysis, a lot of what we focus on is price. That's the trend, and primarily things like that. We'll talk a little bit about breadth and sentiment here as well, because those are a couple of tools that we keep in our tool belt, and we'll go over some of those indicators that we see flashing, maybe some interesting things to us. Again, fundamentals. This is a sort of a high level thing, but of course, there's a lot more detail you can do on the fundamental analysis things. Really, the more detailed work comes down to earnings growth and maybe financial modeling, like how do you know that these companies are actually going to grow earnings, by 25% or greater over the next 4 to 8 quarters or something. So that's really what it comes down to. Fundamentals. It's is the company growing in earnings? Because we know that these stocks will move if earnings are moving or expected to move. So that's what we focus on, certainly. And then macro, it's sort of it's something we pay attention to. It's in our we want to understand the context of where we are, at any given point in time, for the economy, of course, because it gives us conviction to be able to buy dips or, if we should be cautious, perhaps. But generally, we know the market leads the economy, so we're more in tune with the market, and we figure we're going to get all the information that we need in a more timely fashion by just following the stocks, most importantly. But we do want to be aware of what we see, and mainly as that relates to the Fed and what the Fed's doing, because we know that the old adage, don't fight the Fed. We know that is absolutely true, and we don't want to necessarily fight the Fed, as many smarter and more successful investors have told us over many decades, don't fight the Fed. So we're not going to disagree with that. So I'll get into some of these charts, and I know this is a bit of a busy chart, but I keep adding to it. I kind of decided I'd keep this going, adding different annotations here for the market to understand, what's been going on and what's been moving things. And as you know, over the course of really the entire year, we've just had a very headline-driven market, right? It started in February when we saw trade tensions heating up, and trade war with China and all these things, and tariffs and yada yada, all that stuff. And then the 90-day pause, and then the Besant constantly calming down the markets and all these things here. Now we've gotten here more recently. Let's talk about what we've seen in the last month or so. This was a Friday. This was when the Trump tweeted about China, and there were some concerns about the rare earth minerals controls that they were kind of implementing, and it seemed like they were going to implement them across the globe. And Trump, had some words. He actually had an extremely long tweet outlining how upset he was with China and everything, and how they were going to have 200% tariffs, and the market sold off hard there. We kind of looked at that as a change in character in the market, and then more things were said. Besant talked more, Trump tweeted more and said some more things, whatever, and we ended up just shaking it off and making new highs just a couple weeks after that. Some of this was definitely an anticipation of a China deal. But a couple of things I want to point out here. This, I think it's kind of hard to see, I know, but this all-time high was the day the Fed cut, right? A widely anticipated cut. And Powell said something like that the December rate cut is not a foregone conclusion. But he did confirm that they're going to stop rolling off the balance sheet. So the shrinking of the Fed balance sheet is going to end. So with that, it was received a little bit mixed, but we got the Fed cut. We got the end of QT, and then a couple days later, Trump confirmed, this was actually over the weekend, he confirmed that a China trade deal was reached. And then with that, I remember Roy and I talking that week about the context of that week. Okay, we got a Fed rate cut, we get a China deal, and then I think there were several massive headlines about OpenAI investing hundreds of billions, and all these different AI companies talking about tens of billions, hundreds of billions, and NVIDIA had their GTC, their GPU conference that week as well, and talked about $500 billion of revenue, which was better than the consensus number by far. And so we just had this overwhelming positive news cycle here. And I know we were talking about it in real time, kind of unsure, can it get any better? And it doesn't really seem like it, but man, there was a lot of news flow that week. And with that, Friday, government shut down. People were, I guess, selling off. Just in general, I mean, I don't know if it was really fueled by the shutdown at all, but we know that Monday we got a pretty strong bounce on the news that it looks like the shutdown's and it looks like it's nearing an end, right? And so more than likely, it's going to end with a House vote maybe this week or something. So that's all the news. I think these are all the really key things that have been happening around these pivotal days on the market. And we showed this the last couple of months too, just to talk about the FFTY more, because the FFTY, again, we sort of say it's like what we traffic in. It's these high growth tech stocks that we focus on, and it's been choppy. We see July, August, September, where I know we were stopped out of several things a few times here and there over that 2-month period because of these really nasty breaks in the FFTY. And when you've got when you've got the index down 7, we always say, there's a possibility you're down 10, 12% maybe even from the highs when you're getting these really nasty pullbacks in the FFTY. Even more recently, though, you can look at these as, in hindsight, of course, you can see that they were sort of buyable dips, right? But more recently, and maybe we'll all zoom out again. More recently, you can see there's been a pretty substantial, we think, change in character in the FFTY, to put it mildly, where you've had this really, really exhausting choppiness throughout the entire month of October and now leading into November. Perhaps the change in character really happened here at the end of September as well, but this is something that we, have noticed in our accounts, right? And that's what has given us pause most recently to really have any exposure because it's just been so unbelievably volatile in a lot of these high flying prior leading stocks. I wanted to zoom in. This is that top that I just shared, that top up here. It's just zoomed in to give you a sense of the intraday moves that that we saw in the FFTY in just a couple of days here and there. So the end of September, we had a 7% pullback. In these 2 days, we were down 6%. And these 2 days from the high, down another 5%, 8%, 9%, 15% more recently. And then we got this bounce, and now we were down maybe 5% from high to low over these last couple of days, Monday and Tuesday. So with that in mind, that's really exhausting stuff. If you've been 100% long a lot of these stocks, you're experiencing 5%, 8%, pullbacks routinely for the last couple of months. It's not really normal. In our experience, we don't think that's exactly normal. And you can see what a much better trading environment looks like. Just look back at the chart, right? Talking about May, June, July, August, September. That to us, we're seeing kind of toppiness, distribution, things like that. And I annotated where we actually sold and went into 90% cash on that day, that break day. To us, where we experienced that snapback to a large degree, and decided we were ready to really protect ourselves for something worse, considering we had that really strong snapback in a lot of these stocks, and then we rolled again. And so we were prepared to exit, and that's what we did right there, almost entirely. We held on to a few stocks, and right now we just hold Tesla at a small position. So for us, yeah, again, that's where we've been out. And so far, we had a precipitous fall Wednesday, Thursday, Friday. some recovery, and then we'll right. We have no idea where we go from here, but we had a decent bounce from the lows, and um, we will see, but we are defensive with that action. So now I'm going to go through some of these subgroups. A lot of these things that were leading and that were big winners really for and parts of that FFTY a lot of times. Here's what I don't know if anyone else or who else calls them these, but Neo Clouds is a good name, I think, for them, and I like that name, whoever coined it. But these are basically all just the old a lot of them are just old Bitcoin miners that are well versed in building data centers. Because all the Bitcoin miners do is buy a bunch of GPUs and put them in a warehouse and mine Bitcoin. Well, they can transfer those skills, and then they can lease those GPUs that they already own, or use their competence to build new data centers for Meta and Microsoft and Google and Amazon and all those people. So we've seen a lot of that happening where these Bitcoin miners are converting, right? And they've been a very, very strong group because you're seeing these huge numbers where somebody like Irin was doing, 500 million in revenue, and they're signing a deal with Microsoft for $10 billion for 10 years or something. So, there's been massive numbers being thrown out there for these data center leases. Unbelievably big numbers where, Irin's going to grow revenue by 10x or something over the next couple of years from what they were doing in 2024. So, it's caught a lot of eyeballs. But what we're seeing is, we are seeing a weakening across the group. I wanted to show these candle glances here to get you a look at the whole group. CoreWeave in particular, that announced earnings today and was down 16% on the earnings report. That this group has been essential, right? It's sort of indicative of the insatiable AI demand, right? Nobody's going to have enough computing capacity. Apparently, right? OpenAI needs $1 trillion of computing capacity. And again, we keep seeing bigger and bigger numbers thrown out there, but the stocks have stopped going up, it looks like. CoreWeave is the largest of these by market cap. And that stock is down almost 50% now in the last month or so. NBIS and IRIN have potentially put in double tops. And there's just questions all around this group about the return on investment that they're getting, whether they're getting even good deals at all. Are they getting $2 billion worth of revenue and not making any money? Are they at risk of losing money because of improper pricing that they're committing to? We don't know, obviously, but the fact is these stocks seem to be peaking despite getting larger and larger deals signed, and it just has not been enough. Right here, for example, you can see NBIS. That was the first deal that they announced, the first major deal. I don't remember if it was Google or whoever, or Microsoft, but they got a huge deal. They were up 50%, and then they announced earnings, and then had another deal signed for another 5 billion, and the stock didn't go up on the news. So that's always something that's important, right? When the stock stopped going up on good news, what do you do from there? So this is a key group we think to watch. I also like it because it has implications. I know they're not the hugest companies in the world, but they do have implications that are greater than just themselves, because it's just maybe indicative of the overall AI investment picture, right? So we just want to be, we really want to key off of these. And Roy and I, man, we missed Irin, but man, this has been a monster mover from $20 to almost $80 fast. And we may look back at this and say, okay, that's a classic double top, right? It certainly looks like it. We don't see it as buyable. You don't have a base here at all, right? You don't have a base here that's several months to put on a large position and hold for a long period of time. But anything's tradable, clearly, right? And you could have, tried to guess this pullback, right? Breaking the 21-day and get the snapback. But everything from here kind of looks like a trade. It doesn't look like, there's no clear buys here. But, with the volatility, if you're an active, extremely active day trader, feel free to try to trade these around. But you can see what kind of these things, IREN in particular, might be moving 10% every day the last month or so. So this is one that I'm kind of looking at and trying to draw a parallel to if this is the SMCI of this run up in the market, right? If you guys remember the start of 2024, that SMCI move was massive, and all these stories get told, and they have 25% gross margins. It's fantastic. They're growing 100% a year and accelerating, in earnings and stuff like that. But ultimately that gets priced in very, very quickly, all the upside, and then reality hits and the pricing gets a little bit worse, and their gross margin strength. And it didn't necessarily mean the market move was over entirely. It didn't mean the AI story was over, but it did put pressure on things nonetheless, just because these things move so fast. And it peaked after just a quick 2-month run, and that could be what happens here with IREN, where it struggles from here. So I don't know. I find it to be an important stock. It's been a kind of a darling. If you've ridden this up at all, congratulations. That's great. But you can't argue with the change in character and the toppy looking pattern, with the increased volatility and difficulty holding new highs the last few days. Another group that has been high flying, extremely speculative, quantum computing. But nonetheless, if you were able to trade this, you could have gotten some really solid moves out of these companies, and perhaps indicative of a little bit of froth when you've got all these pre-revenue, really pre-product companies that are getting a lot of eyeballs and getting a lot of trading volume as well. And these arguably could have peaked as well. You can see the pullbacks here. D-Wave at the 50-day. The others have broken the 50-day, but still a leading group that has really gotten hit. Same with small modular reactors. Down 50% from highs. A lot of these, no product yet. Speculation that they will have a product, and they probably will. Fine, but this is indicative of stuff that was in the FFTY and was showing froth or whatever. But to be fair, see, Roy and I struggled with a lot of this FFTY action too, where we weren't participating in these things that didn't have a product. But the FFTY was so filled with stocks like that too, and propelling it higher, where you could get caught up and think, oh man, these leading growth stocks are the SMRs of the world, or the Oklos of the world, or the D-Wave of the world, when they don't have a product. Just because they were in that index, doesn't necessarily mean they're a durable company or whatever it might be. But nonetheless, you could have traded these. We chose not to, because we don't feel comfortable putting millions of dollars into a company without revenue or earnings or a product for our clients. But we are noticing this. We are noticing the break in a lot of those. Crypto, this is one we've struggled with and we got wrong, and thought it was about to have its moment in the sun with this bull market. There were a lot of fundamental changes happening with the administration, with legislation, things like that. But they have not been able to get their footing. Crypto has not been able to get its footing since really, I don't know, January probably. So it's just gone nowhere for the entire year now. Despite those different things, I think, I talked a little bit last month probably about the Ethereum trade and Bitmine and things like that, which are fascinating. And saying that the entire financial system is about to be built on Ethereum. Maybe that's the case. Maybe it's just early, but you can't argue with the price. I mean, the 50 days are rolling over, in downtrend now. I mean, these are in long-term downtrends. All of these are now. So, that's been a very, weak part in the market as well. Some other things to look at, off the highs quite a bit. A lot. These are a bit more, institutional quality. A lot of these, and these are some we tried to trade. Mostly GEV. Well, we traded GEV, BWXT, and TLN. So some more legitimate, utility power companies that, that are going to participate in powering the data centers of the future. Absolutely, they are. But GEV below the 50, bad reaction to earnings. VST below the 50, TLN now, and CEG right on it. So things that prior leaders that we've traded GEV well over the past couple of years, but perhaps needs more time. And then I threw in a few others. I just called it the others. These are some other things that maybe showed up in the FFTY, and these are those high growth, cool technology companies that were having their day in the sun, and had really good runs. And I don't know, I don't know anything about if they're over really, and they may or may not be, or they may be for now. Just they may have peaked for now for a couple of years or 6 months. Who knows? The point is, we've seen that change in character, and you can clearly see it in a lot of these stocks and in the action. And so, if you don't have an exit strategy, you can just watch. You can watch a lot of those things evaporate rather quickly. If you get married to an idea, it can happen fast. I certainly hope they're not over, because I really like the idea of all these companies and everything, but the stocks are telling us a different story. Next, I'll go through a little bit about the. I'll go over the OpenAI stuff. Right, this is another thing we've been seeing a lot of in the market. I'm calling OpenAI, I guess, the kingmaker right now. And what really this one fooled us. I mean, really, Oracle fooled us with this massive volume. I mean, unbelievable. This thing was a $700 billion company or something, and almost became $1 trillion company in a day because of this backlog increase of $500 billion or so. And there was some, they didn't say exactly who did it. They knew it was one customer. That was a big impact of this. But it was OpenAI. It was revealed maybe a day or two later. It was OpenAI. So, with that, either way, you see the backlog of somebody like this, and that volume and price action, and then it completely gave it all back. And then I know I think we bought it here at the 21 day initially, and then I think sold it down here when it broke the 50. But to us, right, that's got all the ingredients. An institutional favorite, right, $1 trillion company with price and volume action like that, on the future outlook. But then, we can sit here and speculate why is it faded? Well, they're funding it with debt. Well, maybe OpenAI can't even pay it, right? Those are all the questions that obviously come up as you start losing money on the trade, right? You're like, well, why am I wrong? Well, the market's telling us we're wrong. It doesn't really matter why we're wrong, but there are legitimate concerns about if OpenAI can obviously pay that, if they can commit, if they can really honor these commitments. There's a legitimate concern, and clearly that's being priced in Oracle. That alongside with, are they getting a good deal, right? Are they getting $500 billion? How much are they making? Is it profitable business for OpenAI? Are they raising too much debt, right? Is the cost of debt going to even make it worth it? Is that risk too high now because now they're funding it with debt? Maybe, right? So either way, really, really huge expectation breaker. Really huge expectation breaker for something like that. to just fade the entire move over the course of the next couple of months. Also wanted to point out, this Microsoft and OpenAI joint press release they released on that day. Again, puzzling, right? They're putting out some clarity. They're talking about their stake that they have in OpenAI. They own like 27% now. It's worth about $135 billion. And that's is it really going to peak on that news? Maybe. I mean, I know people expected them to own some stake. People expected the 30% stake or so in OpenAI, but it was never that certain. Maybe it's still not certain too, right? Because we know there's some issues with them reorganizing as a nonprofit into this public benefit corporation, and I know it's still getting fought in court by Elon in particular. But interesting, right? Nonetheless, interesting. We're getting these, seems like important announcements, and then the market fades entirely again with this Microsoft deal. Amazon, another one. They rallied 4%, so they had a blowout quarter, great quarter here on earnings, and they had their cloud revenues accelerate, which I think some people were concerned about because they were losing share last quarter. Here they rallied another 4% on day two when they talked about a $38 billion commitment from OpenAI. Again, the next day, sure, the market was a little heavy as well, but it faded that very quickly too. And then AMD, the other king being made here. AMD is giving up some equity. You can look up the details of the deal on your own, but they're giving up like a 10% stake or something. And AMD and OpenAI is committing to purchase, $100 billion worth of chips or something over the course of the next several years. So, interesting too. And they had an analyst day today, and the stock's down a little bit. Of course, Lisa Su put out some great estimates and all that, but it wasn't enough to keep the stock going. So, just curious to see if AMD will give back more of that OpenAI premium as well over the coming weeks. Okay. And so really, guys, I guess the point I'm trying to make here by going through all these detailed headlines and these news events and everything is, why are we peaking on all the, on this seems like unbelievably great news for these companies? NVIDIA, this is where they had their conference on that day. Jensen says something about $500 billion of sales over the next 5 quarters. Consensus was at about $380 billion. So, you look at that, and that's like a 20%, 30% increase versus consensus, right? Wow, unbelievable. They're accelerating. They're going to do $100 billion quarters next year in revenue in 2026. $100 billion a quarter at least, $125 billion a quarter, right? Those numbers are astronomical, and better than this year. And then the stock faded. So one of the things we hate is these fake breakouts. I mean, those fake breakouts can turn nasty. When you make an all-time high and reverse it, within just 5 days, and get back in the base, those can be tricky. You get people you suck people in, right? You suck everyone in, and you could end up being, sort of a trapped long there. Nonetheless, it snapped back very hard on Monday. Today it came in a little fine. I don't really know what to do with that stock, like at this point in time. I would think that the fundamentals are so unbelievably good that it can continue to drive us higher, but that action is that's not what you want to see, right? Again, just like the FFTY, this is what you want to trade. Geez, right? When it hugs the 10-day and there's very low volatility on the way up, this is that character change, which is it tells us to kind of slow down. Maybe keep your mental capital intact, versus try to trade something that is moving like this. It can be difficult, of course. Okay, and then other things, right? And I'm just trying to get through, and maybe too much, but I'm just thinking about all this peeking on good news stuff. Um, markets tend to do that, and I just want to hammer it home, I guess. But again, not calling for a major bear market or anything, but just saying this is what we're seeing, and I'm trying to figure out, is it important? Like, how important is that? Is all this stuff, all these sort of signals? Alex Karp, everyone's has a quote like this when before their stock gets hammered too. They're arguably the best results that any software company has ever delivered, right? And I tend to agree. I mean, I think the fundamentals are outstanding. Unbelievable quarter, huge numbers, and they're accelerating. I think even next quarter, I think they'll continue to accelerate. But they beat by like 12%, and I don't know if they can beat by that ever again. That's the issue. These beats are the magnitude of the beats might have peaked, perhaps, but anyways, it came in hard. Whatever valuation, who knows? There's always a valuation argument on them. The positive news on this one is the huge snapback on Monday. Is objectively a great response, and bulls took a very strong stand there. This continues to be like my favorite fundamental idea, whatever growth idea, and being a software business, I think is just a whole different animal than a lot of these other growth companies that are out there right now. And then Hood, another just I think monster, bull and bull, darling of this market too. I was looking back at the fundamentals just to see, this was their 8th straight quarter of triple-digit earnings growth. The product's awesome. They're expanding all these different things. They keep pushing, innovation. They keep, adding all these different launches that are great experiences, and Vlad's doing a great job, and he's doing a great job staying in front. And they have this, the huge secular trend of just getting more and more millennials and Gen Z or whoever invested in the market, and a lot of those assets are going to find themselves on Hood over the next decade. So, this one, just again, great quarter, great results. Nothing's changed fundamentally, but the negative reactions, man, the negative reactions on these great reports, is just that's part of it. It happens a lot. You always got to know what's priced in, and you never know. So, Roy and I, we talked about breadth quite a bit too. I don't like to harp on it too much because I know that the market can go up, in your face for many, many months while breadth just narrows because there are just leading stocks that lead, and they can propel the market higher, and that's sort of fine, right? That's fine until it isn't, and then you have to figure out when isn't that fine. This happened quickly where we made this new high, this break from the China deal, new high. Great news. There's the China deal. There's the Fed cutting. Nvidia's demand is going gangbusters. And we made that new high, and breadth was kind of lackluster during that. So that's that was a pretty quick divergence. Maybe a signal. This is the S&P stocks above the 50-day average. It's just like I was talking about. It's been in that steady decline really since May. So of course you can't use this as a great signal a lot of times. You just have to figure out when does it matter. That's the art. When does it matter that the market's been a little narrow or whatever? But it's something everyone's been talking about, right? The narrowness, but does it start to matter? Is kind of our thought. Something here on sentiment that I wanted to highlight. This is that NAAIM. It's the National Association of Active Investment Managers. and it's how long are active managers. It did hit in excess of 100% last week. For us, we've talked about that in the past. In excess of 100 is sort of a yellow flag, I guess, a yellow light indicator. Right here in July, you can see, the timing of that was pretty good. April, that was also when, we got a decent little pullback in the indexes, things like that. July of 2023, it hit for a week in excess of 100. And then I showed even further back where you can see in 2020, this was that week where we had a nasty little correction. And 2020 and 2021, near the end of these bull markets, or at least the end of this bull market, you can see it did live above this 100% for some time, and you made a lot of progress, to be fair. And that's just the whole point of not, marrying yourself to one indicator, right? Because we can't afford to miss that run, which might have been 20% in the indexes, when people were 105% invested the entire run up. But it can give you a signal of exhaustion, perhaps, too. So it's just an indicator we've seen have a decent track record of saying, hey, let's be aware of what, if we need to get defensive, we just need to be aware of it. And I like this indicator a lot, given its past track record. And here's the put call ratio that we look at. This is a 5-day average. This red line shows that complacency. I don't know, not a huge signal there, but it did break the red line, and we rolled over. Since then, we've picked up, and we're sort of neutral on the put call, so nothing screaming at us there. With that quick pullback, we had an oversold reading here in this oscillator. This is the NASDAQ McClellan oscillator. So the NASDAQ getting, hit worse, whereas this New York Stock Exchange oscillator didn't hit that oversold condition while the NASDAQ was. Okay. And then lastly, look, I just, gosh, we know, I was telling Roy that the FFTY is what I'm calling, like, kind of the North Star right now of the market action. As much as we know, or we think we know, that, okay, the Fed's cutting, there's no recession, AI investments booming, and we know what that setup looks like historically. In particular, this red line shows, what markets tend to do when the Fed starts cutting and there's no recession. You can have an explosive move. But the market sort of, under the surface might be telling us different things. We'll talk about, there's some rotation we're seeing. Sure. So, despite whatever was working, if that's not working anymore, we need to make sure that we're following the money, and, we need to know what is working. 2023 was a year where the Mag 7 propelled everything higher. So if there's going to be if there's only a Mag 4, we need to be in the Mag 4. If Meta's gotten kicked out or Microsoft's kicked out, we need to make sure we're there. But Roy's going to talk about, I'll hand it over to him. We'll talk about the things that are on our list to buy. I know we were talking a lot about biotech, because we'll pull up a big list of what the market's IBD growth 250. We'll show a lot of those biotechs are showing up with some relative strength, and just a few others that are showing relative strength. But yeah, it might be just a change in leadership that's happening right now. It's yet to be seen, but there's sort of the summary of what got us to rein in our horns a little bit, and yeah, what got us defensive is that action, and really in those indexes and everything, the FFTY and the individual stocks are what really kicked us out. Especially when things like Palantir, my favorite idea, is down 9% on an absolute blockbuster of a quarter. you just have to sit there and admit, okay, well, that's not the normal reaction. What's wrong, right? So we're sitting here mostly in cash and just sort of trying to stay objective, and we find we can do that by taking a step back and just observing for a little bit of time, and that may be what we need. We're as we're looking at this, I think Roy would agree. We may need just more time, and there's a time to be in and there's a time to be out, and we definitely firmly believe that. And that, this to us, this looks like it could be a time to be out. Although we're going to have to be pulled in. We're prepared regardless, right? We're prepared for a pullback, obviously, when we're lightly invested, but we're always working on our list and of things that to buy. And with that, Roy, I'll hand it to you. I'll let you start talking about the stocks, and we can go over some of those things, the short list of what we're really looking at.
Okay, Wes, great job. Can you pull up Market Surge and pull up the Market Surge Growth 250 list, Wes?
Yeah. I'll do that. Put it on. All right. So pull it up. There it is. Yeah, this is okay. Here's the whole list, the IBD or Market Surge Growth 250 list, like you were talking about.
Okay. So to get started, from my perspective, I want to address the audience and ask you, what's your playbook? From the viewer standpoint, that's really what you need to consider right now in terms of what to do. What should you be doing in your account? Now, everyone's different. Everyone's got a different risk profile. Everyone's got a different risk objective. Some people, like to, invest on margin. Other people are very, very conservative. We're growth investors. We're looking to be in the most resilient, the strongest growth companies that are growing their earnings and revenues primarily faster than everyone else in the universe. And we have found that there's a 100% parallel between the stock's earnings growth and the stock's performance. There's a great correlation there over time. That seemingly always works. However, short term, there's always news. There's news that gets in the way. There are tweets that get in the way. There's economic statistics that get in the way. And so you have to navigate through these cycles, through these upturns and downturns. And let me tell you, it's very, very, very brutal from an emotional and behavioral standpoint. We see where, many books have been written regarding the behavioral implications of investing, mindset, and how important it is to maintain your confidence. So once you lose your confidence, even if you've got a great process, you've lost you've lost a lot. So it's important that you don't lose your confidence here. And for us, our playbook, and I just recall from a month ago, our playbook is, listen, we've got a portfolio of 15 to 16, 17 positions. We were very, very bullish in terms of thinking that the market is going to ramp into the end of the year, into the first of the new year, because of a lot of the anecdotal statistical studies that we've seen. However, that doesn't mean that it will necessarily happen. And that's why it was important for us to control and maintain and manage the downside, because things change quickly. Things change fast. And that's why we went to cash 4 days off the high, because we weren't liking what we were seeing from a volatility standpoint. And again, we have a lot of technical indicators that we observe, that we look at, in terms of momentum, such as the MACD, stochastics, point and figure charts, and price phase. But most importantly, it's price. And I have a little saying on my computer monitor: what is truth? Price is truth. Price is the only thing that matters. So, price is the only thing that matters, but in the whole context of scheme of things, you want to, we want to like have a thesis approach to, well, what's the dominant fundamental theme in the market? The dominant fundamental theme in the market was AI. It was the data center growth based on the hyperscalers capex, uh, the semiconductor boom that's going on in terms of the build out of the AI, this AI secular trend, which is, as many of you may have heard the term, super cycle. And we think that we're in a super cycle that's really, it's not going to be like anything we've seen before. But in the midst of the super cycle that's going to last 10 or 15 years, there are going to be many ups and downs. Even when you go back and you look at some of the great growth stocks, the companies that were there first did not necessarily win. BlackBerry was there before Apple. Yahoo and AOL was there before Google. So you don't necessarily the first mover advantage doesn't necessarily last for the whole extent of the move. Many times there'll be new companies that we've never even heard of that are going to rise to prominence, that are going to lead the market higher. Brand new companies, brand new technologies that we couldn't even imagine. Many of us are following Tesla. We could not even imagine auto taxis and robo taxis and humanoid robots. We couldn't imagine that a year ago. And now we're on the precipice of that being reality. So it's important to understand where the money has been and where the money is going. And the title of our lecture today had to do with rotation and the choppiness of the market. And certainly we've seen that. So that should be the market activity over the last two weeks should really raise the hair on the back of your neck to be prepared for anything that may happen. We can easily make new highs, or we can have additional weakness right here. Now, Market Smith Growth 250 it's a series of screens that Mike Webster has designed from IBD, and I believe it's about 30 very proprietary, complex screens. And it's the objective is to study and find the new industry groups that are emerging and the new stocks that are emerging. The problem with the list like this is that there's high turnover, just like the FFTY that we sort of use as a barometer. The FFTY has 1,000% turnover. That's why you've got to be on top of the market, and you've got to be observing and screening for the stocks that are emerging, and providing new leadership. And what we're showing here today is how much red there was in the market today. And a lot of these stocks that were red in the market, they are potentially peaking, like especially the computer data storage stocks like Western Digital, Seagate, SanDisk. I mean, they all look very, very extended. Micron, they all look very, very extended, and they look like they can come in. But these stocks have much better earnings than the companies that Wesley talked about before that didn't have any earnings or didn't have any revenues, like the quantum stocks, the nuclear power stocks, and so forth. So many times you can be investing in the theme, but if there's no important earnings news or earnings momentum until down the road, those typically are flash in the pans, and those typically the market participants typically fade those. And we see that that's clearly what's happened with a lot of the Bitcoin mining stocks, the quantum stocks, and the power stocks and so forth. So this is this is a pristine list of leadership. But what I want to point out is with the red on the screen today, these are potential short setups, not longs for us. And that's basically kind of where we see the market like right now. We don't think Bloom Energy here is a buy. We don't think Seagate, SanDisk, Western Digital, Micron are buys. We don't think that Lumentum Holdings is necessarily a buy right here. So there's a lot of turmoil under the surface, but we want to point out, well, where's the market moving? And the market is moving right now to the medical biotech area. And so these are the stocks that are screening the most, screening the best. And this is where the new leadership is taking place. So if you can do a screenshot on this, so you can get, so if you don't have market surge, you can have a list of these stocks so that you can do your own research. But this is where we think the leadership is moving right now. A couple of our favorites are ARGX. Wes, will you click on that one, ARGX, and pull that up?
Yeah.
And so we think that maybe, maybe with this rotation that's going on, and so rotation out of big cap tech to a broader audience of stocks. And we can see that if we look at some of these unweighted averages like the RSP and QQEW and so forth. You can see that the broader stocks are outperforming right now the most concentrated stocks in the market right now, in the Mag 7 area. So this ARGX, if you can, as you can take a look at the chart, it's got triple digit numbers. So biotech with great numbers quarter after quarter. You can see that 273% last quarter, and the quarter's out of the way. The quarter was just reported a week ago. So the quarter, they had a fantastic quarter. They're making a huge amount of money. You can see that $5.18 for the quarter on $1 billion in sales. This isn't your Aunt Susie's results. This is a major powerhouse of a company that's asserting its leadership, and it's being confirmed by its market action and so forth. So that's why we think it's very important. We think that that this stock is one that's on the top of our list here. We just we would ideally like to see this stock come back to the 10-day or the 21-day to initiate a position. But when stocks break out like this, many times they don't come back. So we'll have to make a judgment call in subsequent days to try to get on board this likely new leader in the market. So this stock's got great fundamentals. Accumulation, distribution of B, a composite rating of 98. So it's a leading stock that we've got our eyeballs on. Another is INCY. The same type of pattern where you can see where, if this is a real deal, these stocks have only broken out like a week ago. So while the majority of most of the technology stocks came under terrific pressure, you had a number of these stocks that are asserting themselves and that are bouncing out of these congestion areas to new highs in price. And again, as we remind you, your biggest winners are going to come from those stocks that are making 52-week highs in price and all-time highs in price. So it's the same type of profile here. You can see triple-digit earnings growth, 111%, 186%, 100%. And this is where we think that the market and the institutions are going. And it's very subtle. I mean, this has only happened in the last week. While there's been a great amount of volatility in growth stocks, and in the Mag 7, we see stocks like this that are giving up very, very little progress, and so they're asserting themselves. Wes, will you come back to the Market Smith 250 for me, please?
Sure.
And so, so the medical biotech area, and you can just go through these yourself. Pull up TVTX, Wes. You can see, TVTX, you can see as you go through these, man, I'm looking at the numbers and I'm seeing, wow, man, 228% earnings growth right there on 162% revenue growth. I mean, powerful, powerful growth, powerful numbers, and the stock's breaking out to, an all-time high. So, the great earnings on an annual basis from this year to next year, earnings are expected to be up 300%. This is the kind of power that you're looking for.
Right, and the turn to profitability is so hard, I imagine, in these companies where that's so key. If it's a credible, profitable, year next year, which it looks like it is because the quarter was so, good this quarter. Feels like a big milestone, right, in the company's evolution, changing from that R&D negative for, I don't know how old this company is, but turning a profit. Gosh, that's a big deal.
Pull up EXAS, Wes. That's on the list right here. See the same type of profile, earnings that were just reported. Earnings were up 243%. Notice that's the last quarterly numbers, and notice what the earnings from the annual results expected next year. Earnings are expected to be up 143%. You can go to expand the list a little bit, Wes.
Yeah.
I mean, I've gone through just every stock in this list, and just about every one of them has, IONS. IONS. They all have great fundamentals. So this is, it broke out a month ago, and the first pullback to the 50-day is normally viable. It just hit the 50-day yesterday. So, and they just reported earnings. Earnings are out of the way. But I like the action. The numbers aren't as good as the other two, but the action is telling you something is going on. Institutions are certainly buying, those stocks. Did you pull up IONS?
Yeah, that's what's up here.
You got it. Okay. That PTCT, pull up PTCT.
That one's showing up a lot.
And again, it's market action. And why are these stocks making new highs? And there's a plethora of them. And why, how do you participate? And this is sort of, this is something that we haven't seen in quite some time, where biotechs are, they begin to assert themselves and show emerging leadership. But it's certainly, we're using this time in the, while we're, 97% in cash, we're using this time to try to do our research to develop our buy list so that we can get the next new leaders here. But certainly biotechs, that's the number one. That's the number one group that's on our list right now. Wes, if you go back to the 250, let's just expand the list a little bit so that we can see other groups. There's the mining stocks. We're really not playing the gold stocks here. So we really have never traded those stocks well. So we're sort of passing on those stocks. The semiconductor stocks that's sort of that group has been full of leadership stocks. But when you look at things like Nvidia and Credo, like pull up Credo right there, Wes. And this was by far had it had some of the biggest numbers quarter to quarter. You can see that over the last 4 quarters,
Mm-hmm.
900%, 400%, 500%, 600%. But look at that. Look how the stock broke out, and you had that false breakout to new highs. It pulled all the way into the 50, and you came back and made this marginal new high about 2 weeks ago, 10
Yeah.
days ago or so, and then we've rolled over. So this is clearly poor action in what was one of the leading groups in the market in the semiconductor area that is what they're wired in the data center, very, very heavy in the data center area.
Mm-hmm. Um,
ANET and ALAB were also in the group, and we're just pointing this out so you can see that what used to look, what used to look fine now does not. So you
mm-hmm.
can see where, I mean, just out of the blue, where these stocks just got pummeled. And so, if you don't have your stops in, these stocks go much more than they have, their volatility is much more than the average index.
Yeah. Um,
Oh, pull up MDGL. That's one that just
sorry, NDGL,
M,
is that what you said?
yeah, MDGL.
Oh,
And this, we're sitting around here, as we're, watching this market consolidate while a few of these stocks are just exploding. MDGL was up $45 today, up 9% to a 52-week high. So this, we're looking based on the action. It just broke out 4 days ago. So we're just, these are stocks that we're just looking at. We want to point these out to you because these are the ones that they're at the top of our list in terms of pullbacks to buy, or just a consolidation, just a 2 to 3 day, 2, 3, 4, 5 day consolidation pullback so that we can get on board. But we definitely see big money moving here into this area.
why did I hide
Expand
that?
the
All right.
list, Wes, a little bit,
Yeah,
if you would.
sure.
So, this group, medical services, that WGS, which is a gene editing stock, that's got really, really good numbers, and the quarter's out of the way. Earnings were up 600%, revenues were up 52%, and you can see it's still in the base here. It really hasn't gotten explosive on the upside, but that's one with the 96 relative strength. You notice the relative strength line is making a new high before before the stop price made a new high as well. That's a very positive action.
All right. I was gonna pull up these just because I know these are data center stuff too. What Sterling Power, this Quanta Services, um, all of them are what derivatives of the same thing, and these are still holding up much better than um, the cloud leasing companies, if you want to call them that too. Because I want to, they're telling different stories, perhaps, right? That maybe the new builds are going to be fine. I don't know, but or I don't know. These infrastructure companies are still holding up much better.
Yeah.
Um, anyways, and Caterpillar, another one that people maybe don't think about as the data center play. But clearly, that's definitely what they're benefiting from too. Um, demand for those heavy equipment.
Right.
Um,
Yeah, pull up like a few of these that we don't want to own. Like pull up, look how extended SanDisk is, Wes.
mm,
Pull
yeah.
that up for our audience. I mean, we don't short in our for our for our clients, but this is definitely something that, like, from a personal perspective, that I'm looking to potentially short a few of these names like this.
Right.
That's parabolic. Seagate Technology making a marginal new high, and so really, I mean, this Western Digital, that looks like a short right here. So I mean, uh, you know, you know, we don't short stocks, in our fund because of the risk, and where you can lose everything on a short because it can go up,
Mhm.
of an to infinity. And so you got to be very, very careful there. We just prefer to find, while the market is consolidating and under distribution, we prefer to try to find the next new leaders like these biotech stocks, so that we can get that theme right. But these are certainly, if I own these, I would be hedging. I'd be hedging the whole positions on all of
Mhm.
these, WDC, STS, SanDisk, MU. I would be hedging them all. Oh, before we get off biotech, Wes, pull up the XBI, because we're considering this, that just had a pretty broad move today, up $3.92. Up 3.5%, breaking out. As the market was under uh, consolidating, and as the market's been under distribution. So this
Right.
this ETF has about 130 to 140 names, and a lot of the names that you just saw on the list are in this. They're in this biotech index, and so we think something compelling is going on in the space, and this might be a desired way of playing that theme that we're seeing right in front of us.
Yeah, and someone asked about the difference between XBI, IBB, and what was the other one we were talking about?
BBH.
BBH. Yeah, those three.
Yeah, you can go to Chat GPT and find and just query and just say, what are the stocks in the IBB versus the XBI, and you can see the list of all those stocks. I believe the BBH is, the Biotech 25 Index. This is going to be comprised more of your Amgen, Gilead, bigger cap biotech stocks than the
Mhm.
ones that we just mentioned to you before, uh, that aren't going to show up here. So the XBI, that's basically supercharged, and those are the ones that are going to have much more powerful numbers than these large cap biotech stocks that are really that just move a lot slower.
Right. Okay.
Okay, what else is on the market surge list, Wes? We'll just go through a few of the industry groups. There's your biotechs, medical care.
Out here
Oh,
now.
medical care companies, medical device companies. You're going to have things like ISRG.
Uh,
You had a great breakout right there. That was earnings. And what's interesting about this ISRG is that they're finally launching a new version of the Da Vinci uh, system, the computerized minimally invasive surgery system. and I actually have had experience with that. And so the stock broke out on earnings, went sideways, and it's just moving out right here. So it's a high quality stock. High quality stock, blue chip in the medical systems area, and you're going to see probably really solid numbers moving forward as a lot of these hospitals move to the new system, the more advanced system. So that's it's looking like it's showing leadership right now, as observed by the big breakout on earnings.
Mm.
So that's one to keep an eye on. Eli Lilly, with their weight loss drugs, or they're just they're it's a powerful company that's just not in the weight loss area, but they're certainly beating NVO to the table in terms of results. Novo
Sure.
Nordisk. So it's interesting that uh, most people think of the weight loss drugs. They think of Ozempic,
Mm.
which is Novo Nordisk, but uh, the big money is in Moderna. So Moderna has been shown in a number of studies to be uh, to have much more effective efficacy, if you will. And Eli Lilly's is the leader. Many times you have a couple of, you've got two or three companies that are fighting it out, but the difference between the number one company and the number two company, normally it can it's normally a huge difference there. I can only point out that while Nvidia was really growing, in the last few years, AMD until recently was really
Mm-hmm.
lagging until recently. So because Nvidia was, they're truly the gorilla. They're truly the leader. So you want to find. It's nice to have a couple of stocks in the group to uh, to give you validation. But then the key is to find, well, who is the number one leader in that group. So that's important to try to determine that and ascertain that as we move forward in the market.
Okay. I'll keep scrolling. What else?
Yeah, aerospace defense. That's been a group that sort of has worked. It's more. I mean, the numbers aren't. The numbers aren't that powerful, and you have had your blow ups too. Like, take a look at that AVAV, which is a drone maker. You would think that the drone makers would be very solid, and you can notice that stock just broke out, and you can see where now you've got a series of lower highs, and it appears to be failing right here. There's just so much. There have been so many companies that uh, that have been rotating around here.
Mm-hmm.
It's been very volatile. But this is it's certainly the aerospace defense area has been. It's been a group that's not great, not powerful numbers, but they're they're they have been stable, obviously. Certainly
Mm-hmm.
with Trump, leading the charge. What other groups are you seeing, Wes?
Well, obviously, my darling here, but they're still in there. Some of these software ones that we've talked about, that had good quarters, on the list, Datadog, Snowflake, good reactions, really. Net had that good reaction, but came in with the market, things like that. Um, Shopify is always something that we're kind of paying attention to. It's a big company, and things like that. So I know we're looking at things that reacted positively to the number. Most importantly, um,
Yeah, didn't Datadog have a good reaction initially
yeah,
to?
yeah, it did, right. So and it's a decent size. It's a $70 billion company. So that's, in our range. It's something that we'd like to entertain for sure. And
We played
back
this in
here,
2020, Wes, I believe.
huh?
We played this in 2020, or yeah,
Yes,
Datadog with
definitely. It was a
Fastly
big,
in 2020, right there, that move right there.
yeah, it was a big winner for sure. In those couple of years, and right here breaking out um, to an all-time high is important. So that's definitely something to pay attention to.
Yeah, no, that's got really good action on day two.
Yeah,
When you take a look at it, like it followed through immediately
yeah,
versus we got kicked out of net
yeah,
Cloudflare,
right.
but and you can look at the difference in the chart. See, it didn't
Yeah,
follow through in day two on Cloudflare, and it
right,
came all the way back into the base, and that's why we ended up selling it. You
right.
know, 4 or 5 days ago.
Yeah. Um, let's see. I don't know. Here's some utility things. Hmm.
Now, see the banks there. The banks have been pretty good, and this might be a very conservative way of getting some exposure to. Pull up JP Morgan. Well, you got Morgan Stanley.
Sorry, I'm pulling up a bunch. Sorry, just clicking
Yeah,
through.
and there's JP Morgan, which is pretty much the quintessential leader in this group in terms of quality.
Yeah, and
So
well, we've talked
yeah,
about the SoFi
oh
uh
yeah.
one too. If you're looking for financials that maybe have more upside, you'd think. And the thing that got me, I mean, I've been interested, but that got me particularly interested in SoFi is the way it snapped back. It was up one of the things that was up the most on Monday, like 8 or 9% or something on Monday. So that was something I paid attention to.
And he was on the CEO was on CNBC today with an interview,
Right, they're bringing
and
back crypto, huh?
yeah, so they're actually the first bank in the United States where they're able to custodian and serve their clients
Hmm.
with crypto. Under a bank, uh,
Yeah,
under a bank's agenda and charter and so forth.
right.
You have a few of these like SPXC, and we're just looking for the one. We're looking for these companies that had a very positive reaction to earnings, and primarily, we would want these stocks to be making 52-week highs. So this is, SPXC, which is, a boring equipment industrial company, but they make pipes and valves. Uh, this company is located here in Charlotte, and it's very quiet, but they continue to just conduct great business, and they might be on the beginning of the build out and of the upgrade in the transmission systems, in the utility grid in our country that's so necessary. FlowServe is another one in this group, FLS. So there's FlowServe. So you can see the institutional buying pressure, and those are the triggers for us. We're just going through hundreds of names to try to find, okay, this is what we're looking for us. This is what our eye goes to. These types of breakouts these stocks that have 10% moves up, at least in price, where volume expands to over 300%. And just to give you an idea of that, today, like we had a few of these, like pull up and just to show what these stocks look like, what they look like. REAL West. So so this stock broke out, was up 38% today, and volume was up 500%. So what is going on, here? So you have, while everyone's watching, as Wes mentioned, like the PayPals of the world and things like that are getting hammered, thinking that they're cheap, Kava and CMG and stuff like that. You're having these potential new leaders that are breaking out. So this is really what you want to be looking at. Pull up SIBN. So what's going on, here? The stock's up 16%, volume's up 500%. So this is the kind of stuff that you should look and put this, in your watch list. TBPH. So, what's going on here? Up 22%, volume's up 300%. And you can see the stock's breaking out to a 52-week high. We want to get on these. We want to get on these early. A lot of these we can't buy because they're too thin. But we're pointing these stocks out for the audience so that you can certainly take advantage of them if you as you are inclined to do so. But these are definitely home run types of stocks, but they're not institutional quality. Pull up the panel on the right. Let's just see. Do you have any institutions in here? So you have 212 institutions, but you don't have any IBD top mutual funds that are in it. These are let me show you sort of a difference. So you can see here, you don't have any IBD top 20 mutual funds that are buying this stock, like the Fidelities of the world. But let's pull up ARGX and let's see what their institutional ownership looks like.
Yeah. So
here's the difference: 700 mutual funds, and look down below the IBD mutual fund index. Those are some of the top mutual funds in the country, and they all own this stock. So when you're there's clearly a huge difference between the quality of ARGX and the other one that we just looked at. But this is exactly what you want to see, and this is what's got our attention. Or okay, if you've got Fidelity and all these guys piling in, there's a reason that they're piling in. So that's important to see. Let's take a look at go back to the index or the group, the panel.
Yep.
There's Apple, Tenet Healthcare, finance brokers. So you can see in the finance broker area, which is this group's really kind of deteriorated a little bit, but you've got IBKR. Robinhood is our pick in that group. And because of as Wes mentioned, the great quarterly numbers. Robinhood today is what Charles Schwab was for, my father 30 years ago. Better mousetrap, great numbers, great product offerings, great service, and new leadership. And it's definitely one of the leading financial companies in the country today. So when you're doing your homework, we run many different screens. We run relative strength screens. Stocks that are just breaking out, uh, stocks that are near their pivot, and we just run screen after screen after screen to just narrow it down and find out where the leadership is. And as we observe, we look at all these anecdotal factors, such as institutions, which institutions are buying it, and so forth. Yeah, that's CrowdStrike and Zscaler have certainly been holding up. There's been, there was a hack in the Ethereum network, and that's a network, just like the internet is comprised of many nodules that are linked together to form a network. And I think that's why Ethereum was off. But it's different between being hacked and somebody stealing your information versus it being immutable, such as Bitcoin. We know that Bitcoin's never been hacked, but it's not a network. It's an asset.
Well, it's the same thing as, anyone can get stolen from,
Yeah.
so not that if you're not handling it, or I guess writing your programs on it securely.
Yeah, so we're guilty of making a number of mistakes as well. So just just because our track record is so good historically doesn't mean that we don't have our share of mistakes. I mean, really, every stock that we've sold, and taken losses in, those are really mistakes. But they're mistakes that are warranted based on minimizing your downside and having a plan of action to so that you can sleep at night. And that's what we spend all our time with, is like keeping the drawdowns in check, so that we can participate when the market is really good. Because the market's been in this choppy environment for months, as the rotation has gone from one group to the next. And we talk about staying on the bucking bronco. It's very difficult to go from one end of the arena to the next and stay on the bucking bronco. And sometimes it's a lot easier, and but right now it's certainly very volatile. But CrowdStrike and Zscaler are certainly mammoth companies that are right in the middle of the security era, that we know that that's going to continue to grow organically. So we own this and sold this as well, just to reduce our exposure, because we thought that just about everything was going to get hit. But this has come right back. You got earnings in 21 days though, so keep that in mind.
Yeah, by the way,
go ahead.
I was going to say a few. Isaac's got a few of these he's asking about.
Okay.
In the chat, Lemonade, something I talked about, I think, just before we got on this call. But I mean, I don't know. I mean, it's just like we've talked about over and over. This is the action we're looking for, of course. big gap ups that are holding, while the market consolidates. So, I don't, yeah, we were debating on if we can buy it or not. It's $6 billion, and they do like 100 or $200 million a day. It looks like, but yeah, I mean, it's all these positive earning reactions are on our list. There's LMND. This EOSE, yeah, I mean, it's one I know it's been on my radar and just I've ignored. More so just batteries, right? Essentially, they're batteries for, again, all data centers. So, it's all, a lot of times Roy and I, we start buying these things and we realize we're really just buying the same thing. There's more leverage and upside to something like EOSE that's maybe gonna, out of nowhere quadruple their earnings. But we've just grown a little bit wary of some of these that have had these massive runs. So that's what we think we'd be in profit protection mode on something like this.
Yeah,
We don't want to.
if yeah,
Go ahead.
yeah,
What?
if NBI, NBIS that made a marginal new top looks, well, it did make a marginal new top this last time.
Yeah.
It didn't go to Iron made a marginal new high.
Yeah.
If there's the leader, so if they're hitting the leader, they're going to come get this EOSE.
Yeah, that they are the same. Yeah, yeah. Um, so yeah, I would want to protect it. And gosh, and yeah, you've been given this massive surge. That's fantastic. You can almost get out at all-time highs, but you've got to have a plan to get out probably. Especially if you were in this early enough. If you're up 70-80%, that's just an awesome home run.
Yeah.
And you gave up a lot if you held, from 19 to 14, and this huge snapback is awesome. If you've got that opportunity to take some off. And then yeah, BE, that's another one. Just again, they really are all the same trade. And and a lot of times what Roy and I end up doing is we look at these stocks and we're like, are they buys? Well, no, they're not buys. And it's hard to justify holding them, because honestly, if they're buys, then are they just sells? It's kind of like sometimes you can say they're holds, but when they run this much, I don't. And you look at the air that can be let out to the 50-day or whatever it might be. That is a lot to give up. And it's easy to say that from the sidelines, and I'm sure that we wouldn't have been able to hold BE through this. I bet BE would have been off our radar here.
Yeah.
And we would have missed the last double, which is fine, because I don't know how people, there's a little bit of luck, it's a little bit of ignorance, or it's conviction, fine. Everything, but that is mentally, that's brutal. If you're unhedged and you've got a big position, you can clearly see the easy money was there.
Yeah.
At this point, it seems so difficult to continue to squeeze more and more, and out of it. And we don't want to sit here and say, man, this AI boom is going to last a decade. This BE is going nowhere. How these things, you talk yourself into these things. Because you made so much money on it or something. But in reality, we don't know. We know that the market moves so fast, ahead of all this stuff, ahead of all the fundamentals, and they'll go out of favor. And then if they're the real deal, they'll keep growing and all that. But when you've got, we'll see, right? BE, Bloom Energy might be trading at 127 times earnings, and then it's gonna sit here and consolidate and grow into the valuation, right? To the point where it's trading at 20 times earnings. And the stock only worked when it was expensive, and now it's going to get cheaper and cheaper and cheaper and all that.
Yeah.
we don't know, but they are the same. EOSE and IREN and B and all of them are, we're all playing the same thing. And if, if AI is not going to, massive AI investments aren't going to keep us going, then, we'll have to look for a different theme perhaps. And maybe we're looking at biotech a year from now. Mike, well, here, let me hold on a second. I'll put this up. John says, time to wait for fat pitches. We might agree with that.
Yeah.
So, because, yeah, and it's so hard. It's so tempting to just jump in, get whipped in, get whipped out. And, but we know that the best setups happen after a few months of pausing, really. Mike, he's asking about VLO, and this is one we looked at too earlier today. And I always think I don't know how to trade oil. I think it's a different beast. I know, we're not talking about long-term earnings growth usually when we're talking about energy, oil, companies. So I don't know how to trade it. Obviously, we see it because it's strong. I don't know though, Roy.
Yeah, there's a relationship between, like on these refineries, normally when oil prices have gone down, you have something called the crack spread that allows you to compound your money. And I think, that's why the company, that's why Valero just had a 216% earnings growth right there. So, maybe there is a rotation into. I have noticed a number of these refiners that are sort of popping up that might, and it may not last long, but it might last from one earnings period to the next earnings period. So it's certainly something to be aware of. So this might be a leader over the next 13 weeks. So you've got a number of these. A few more have popped up. VIAV, that hit our screens.
Oh, sorry, window.
And there's the breakout on earnings. And this is this is in the testing area like Teradyne. We got some confirming action in Teradyne, but that's really, really good action here on this VIAV with the breakout. And that was a 10-300 breakout right there, but it's right on the cusp where we might be able to buy it. They're doing about $80 million in trading per day in terms of volume. But that's that has broken out. Teradyne had a good earnings quarter. TER. So that broke out 2 weeks ago on its earnings report. So we're making a list of all these GMED. There's an earnings breakout right there. So that's part of our process. Wayfair, W. There's the breakout. You can see that 2 weeks ago where it broke out to new highs on the number, came back to the 10-day and then turned back up.
Yeah.
GCT hit GCT. And there's the breakout. You can see the volume spike, the breakout 3 days ago on its earnings. So that's the hard work that's in front of us. EXPE, Expedia. And I don't know if this had anything to do with the government shutdown and the airlines or what, but you had really good action in this 3 days ago on earnings, and I don't think that the government shutdown, open or close, had any material effect, in terms of this company's earnings in the last 3 days. I mean, I don't think, but the stock action is certainly showing you strength there. What's TMDX look like? This is always one of my favorite stocks. Not it. It moved higher on the earnings and then it's come back in. This company specializes in an organ transplant system where they've got they've got vehicles and they've got airplanes. And what makes this stock so interesting is that their technology increases the life of the organs. Many of these organs, they actually fail, or the transplant organs fail by the time they get to the hospital. And instead of packing your organs in ice, they actually warm. They warm the organ and keep the blood flow going. And that's seemingly been more effective in enhancing the productivity of the organ itself. What other questions did we have, Wes?
Let's see. I mean, Mike asked. He pulled out this one. This miner for the gold bugs. I mean, the only thing that matters is gold, right? So these, I feel like I don't know how to trade these well, and I look at these, I look at a lot of these stocks and a lot of the runs and think the high is in.
Yeah.
On that NEM2.
I mean, you had that move
gold
right there. You did that 45-degree move there, and there's a good chance. I mean, time will tell, but you got the easy move right there, and we didn't play that, of course. And I think AEM is the leader in one of the big. I think that's the only one that's in the S&P 500. I think AEM.
Yeah, and you look at the gold volume there near that peak was so huge, and it could have been peak hype on the gold move. But yeah, these are big. These are big runs that these companies have experienced. That's it. I mean, that's it for questions on here.
That's it for questions.
Yeah.
Okay. Well, guys, we hope that you found the presentation interesting. Remember, you've got to have a plan, and executing your plan doesn't necessitate that you make money always on everything that you do, but it means having an exit strategy. So don't let the market volatility destroy your exit strategy. You've got to have an exit strategy. You've got to have your stops in. That's like maximum insurance. Again, we may or may not be right this time. Time will tell. We just know that we're playing maximum defense, and if you happen to be in cash, and a lot of people, because they were so, and we were very, very bullish as well. But when the data changes and the action changes, we had to change our opinion, and we have to manage the risk, because it's easy to come back from a 5 to 10% drawdown. It's not so easy for a 30%. And, in many of these stocks, if you did not, exit and have an exit strategy, you could be down easily, particularly if you're very aggressive in your own margin. You could easily be down 30%, this month, based on the action in these high growth stocks. So, keep that in mind. The most important thing is to stay in the game. Manage your downside, have a process, have an exit strategy, and as John Chapman just said, might be time to wait for a big fat pitch. So, the hard thing to do is to sit in front of your computer and pull the lever. So the longer that you sit here in front of the computer and keep your eyes on the screen and look at intraday activity and intraday volume, that really is we've always found that to be detrimental to really the longer term results that we've been able to achieve. Rarely can you consistently make money just looking at using a 5-day, chart, a 5-minute chart and trading off of that. That gives you just so much volatility and so many false signals. We wouldn't know where to begin. But, in the whole scheme of things, certainly short-term charts are useful in terms of initiating your position. We think that we have a good process in terms of doing that, in terms of entering the positions. But have a process, manage your downside, stay on top of things. We think that when this volatility passes, it's going to lead to a great market move from here. It's just a matter of, will money come back into large cap tech stocks, or will money rotate into these other groups? So time will tell, but we'll provide that to you as we see it. On our Twitter feed, you can find me at Roy L. Maddox at Twitter. And we post pretty much anytime we add a new position to our portfolio. So basically, we're starting from scratch since Tesla is the only holding that we've got right now. So thanks for attending tonight, and we look forward to seeing you next month.